founder and strategist at Indiacharts.com, is with us. And as we say hi to Rohit, let me quickly check the Nifty. Pretty much the same, about 55 points on the upside. Rohit, good to have you on the show. So we're glad that we're seeing some green on the screen today, but it has been a bit of a long winding consolidation patch. The market is at a 1.5 month low, and bank stocks have been consistently falling. Now there's no way of looking through these realities, right? So what have you made of all these data points that are coming together over the last 4 to 6 weeks?
So the reality is that stocks in general have done well. It's your large caps that have really done the pullback, which is showing up in, say, banking, auto, mostly in the Nifty. But moment you shift your focus to Nifty 500, it is doing better. Moment you shift your focus to the Nifty mid cap, small cap, they're doing even better than that. So anybody who has a fairly diversified portfolio would not have felt any pain in this recent correction. So that is the net outlook. The pain is essentially for the short-term traders, especially those who are in Nifty and F&O stocks where the pullbacks have been deep, or more specifically in banking, which has probably been the deepest so far within the key sectoral indices. So that's, I think, the overall picture, which means that if the broad market is really doing well, and to my observation, banking, which has shown a lot of weakness, fallen for 7 consecutive days, is actually falling on lesser and lesser volume on the way down. So we are really not seeing downward, momentum. It's not like increasing selling and there's more panic. It's just, it looks more like a routine correction. We are back to the weekly averages for the banking. So the 20-week average around 43,800 odd, which it is trying to hold. We'll have to watch for a week to see whether that happens. Surely we don't have breakouts to confirm that the bottom is in, but it feels like the downward pressure is exhausting itself. I mean, if you just look at the Nifty, for example, the Nifty made a low of 19,290 first, a couple of weeks back. It bounced, then again it fell. It made a low of 19,250, 57 to be exact, and then 53 last week. Now that's just a 50-point break of the lows. So over a 3-week period, you've actually just not made significant new lows beyond 50 points on the downside. So that's sort of a basing formation. I think the selling is just getting absorbed, if you ask me, and it's mostly been because of global cues and hurt more of the large caps. That's my overall observation.
So there is a low probability that 19,250 thereabout is likely to get breached on the way down, right?
Yeah, I would put a low probability. I'll keep, if you just draw a trend line of these lows, which I spoke of, that's exactly at 19,250. So that is the first level we will hope that holds. And even if it breaks and I take, say, a 61% from the June bottom to the July top, that is at around 19,160 odd. So that's another 100 points lower if at all it happens. Right now, we would like to think that 19,250 is going to hold.
Which are, apart from banks, you spoke about it. What's the outlook on the other sectors? What are the trends, the observations that you've picked up?
Yeah, so, couple of things. First of all, what we always like to talk about is see what performance is telling us. So when you see a corrective phase, like from the 20th of July to the current August, on our heat maps on strike, we can actually put dates and look at what is the performance of particular sectors. And what shows up is the top sectors are pharma, PSUs, followed by mid and small caps, and then energy. Now, this is what is actually held out during the fall. I would like to think that these are segments that will do well on the way up also in the coming weeks. PSUs have been a favorite for a while, so I think that continues. Pharma, to me, was a surprise because while I thought they would do well, I thought they would underperform the market overall on a slightly longer time horizon, but near term, they've actually done pretty well, so they continue to be there. And mid and small caps. So lastly, I think energy. So energy is also interesting because oil prices, which were attempting to fall below $80, now have actually bounced back. We've seen a good rally and a small pullback in the last week. So it looks like we might have a bottom in oil, and that will sort of continue to create interest in the energy sector. So I think these are going to be interesting places to watch. One more I will mention is autos. Now, autos are showing up in what we call the Dow theory. In terms of, they are making lower lows, and in the last 2 days, they've actually started to make higher highs. We'll look at today's closing. If we do close positive, then the auto index will show a trend reversal based on the Dow trend. We are also seeing that in a couple of key auto stocks. For example, Tata Motors may show that based on where it closes today. And in fact, key stocks like Tata Motors, Maruti, and the auto index all have closed positive last week, even though the Nifty is closed 4 weeks down. So that's probably an early reversal in the auto sector itself that we are witnessing.
Okay. Hi, Rohit. I have to ask you about the metals as well. You know, we've seen the dollar index rise from less than 100, around 99 to what, over 103 now. In this context, when we are seeing the dollar index rise and rise, what do you expect for the metals from here? And do you think this is going to be a long drawn out kind of weakness?
So I think the pain has been extended in the metal sector mainly because of what you mentioned, the dollars bounce back, and more than that, rising bond yields, because the dollar index broadly on a 6, 8, 9 month, or rather I should say almost 1 year basis, because last October it topped out. It hasn't made new highs since then, but yes, you do get intermittent rallies. What you do have though is a much stronger jump in bond yields, and that sort of kept pressure on the metal prices and therefore the metal stocks. Now, so I do continue to like them long term. I don't think this can go on forever, but definitely in terms of time, the longer it takes, people remain dissuaded towards the sector in general. But I think there's no choice. I mean, you cannot have a situation where the US bond market falls on itself because you need to get it funded, and therefore at some point of time, I think the Fed will be stepping in. The question is time. I think it's really a question of time rather than price. We've seen the downside. We are not making new lows in metal stocks or metal indices. The question is, when will we get that outperformance? You're just going to have to be a little patient. I think that's if you are slightly longer term, but shorter term, trading the metals is painful. So we'd probably avoid trading it till we clearly see that reversal in the bond and dollar markets. We just hold on to it as an investment at this point of time.
Okay. So a lot of mixed cues coming in. Rohit, finally tell us, I mean, is there one big trade to take anywhere? I mean, whether it is any particular sector or whether you're seeing a bigger trade play out on maybe a gold or the dollar, considering there are so many moving parts to this. And we will, of course, this weekend get more from Jackson Hole. So let's see how that central bank commentary also moves markets.
So since you mentioned gold, I will say this, that the sentiment is definitely at an extreme. We study the sentiment based on the trade futures, which does a survey of all traders globally. And it shows that almost 90%, 88% of traders are bearish on the precious metals. And that's a pretty significant read. If it crosses 90%, it becomes very significant. But we are close. And with that kind of negativity, for the sector, I would think they're close to the end of the correction that we are seeing in precious metals. But yeah, we have to wait for that first sign of a trend reversal. But we should be almost there given the sentiment.
Okay. All right. I would have loved to ask you as a follow-up what that then signals for the equity market if there's a gold rally in the making. But I'll keep that for the next time because that's the really interesting one, right? If gold starts to rally, what's that telling you about equities? All right. Great talking to you as always, Rohit. Look forward to that next call. We will take a quick break on that note.